Have you ever wondered if the financial markets are, well, not what they seem? What if every price chart wasn't just random noise, but was actually telling a story of predators and their prey? Well, today we're going to peel back the layers and deconstruct the smart money concept. And it all kicks off with this really provocative question. When you look at this pyramid of all the players in the market, you have to ask yourself, where do you land in this whole thing? Are you the hunter or are you the hunted? Okay, so to really get what this is all about, you've got to understand the hierarchy. See, the whole idea here is that the market isn't a level playing field, not even close. It's more like a food chain. And this pyramid, it lays it all out perfectly. At the very top, you've got the big dogs, central banks, the exchanges themselves. Then you've got your interbank traders, your market makers, your huge institutional funds. And then way down at the very bottom, well, that's where we come in. And yeah, you read that right. The term they use is literally cannon fodder. It's a pretty brutal way of putting it, but the idea is that the average trader is basically just fuel for this giant machine, providing the liquidity and the opportunities for the players higher up that food chain. All right, so if the folks at the bottom are the prey, that begs the question, right? Who exactly are the predators at the very top of this food chain? Well, this concept has a name for them. They're called smart money. But what does that really mean? So smart money, that's the code name for the big players. We're talking major banks, massive financial funds. These are institutions with almost unlimited money to throw around. And the theory goes that they're using these incredibly sophisticated algorithms to push prices around wherever they want them to go. And this is the key takeaway, right? If you buy into this concept, your job isn't to try and predict the market. Instead, you become a detective. You're looking for clues, for the digital footprints these big guys leave behind, and then you just follow their trail. Okay, but what is the prize? What are these market giants actually hunting for? It all comes down to one single thing: liquidity. You know, liquidity sounds complex, but the idea is actually pretty simple. For you or me, buying or selling is a piece of cake. But imagine you're a fund trying to move billions of dollars. You can't just click buy. You need a ton of people on the other side of that trade selling to you. Without that, your own giant order would just send the price to the moon. You need liquidity. And that leads us to the million-dollar question, doesn't it? If smart money needs all these billions of dollars in orders to make their moves, where in the world do they find it? Well, according to this theory, they get it from us, from retail traders. Think about it for a second. Let's say a trader shorts a stock, right? They're betting it'll go down. What's the first thing they do? They set a stop-loss order, which is a buy order. Now imagine thousands of traders doing the exact same thing. All of a sudden, you've got this huge, predictable pool of buy orders just sitting there. That's your pool of liquidity. And this right here shows you the hunt in action. On the left, you see the setup. All those retail traders going short, placing their stop-losses just above that obvious high point. And on the right, bang, the price gets deliberately pushed up, triggers all those buy orders, and boom, that's the liquidity a huge institution needs to fill its own massive short position right before they send the price tumbling down. Okay, so we've got the motive, the why. Now let's dig into the how. What are the actual signs on a chart that people who follow this concept are looking for? What does the trap look like before it's sprung? A lot of the time, it boils down to something called equal highs or equal lows. These are those super clean, super obvious levels where it looks like the price just hit a wall and couldn't break through. Now, to most traders, that screams sell here. But to someone looking for smart money, it screams target acquired. So, take a look at this. Using classic technical analysis, you'd call this a double top, a clear sign of resistance. The textbook move: sell and put your stop loss just a little bit above those highs to be safe. It feels smart, right? It feels logical. But here's the twist. This is the big aha moment of the whole concept. In the smart money view, that so-called resistance isn't a wall, it's a magnet. That big cluster of stop losses is a target, and it gives the big players a perfect reason to shove the price higher, just for a moment, to scoop up all that liquidity. So you see, the idea is that these super obvious levels on the chart aren't really barriers at all. They're bait. They're designed to attract all those stop orders from retail traders, which creates the exact pool of liquidity the big institutions need to make their moves. All right, so what's the big picture here? What does all this add up to? It means you have to start looking at the market through a totally different lens. It's about learning to read a completely different story from the charts. And really, it all comes down to this one simple but really powerful equation. Liquidity is greater than structure. What that means is the hunt for liquidity, that constant need to find orders to trade against, is way more important in moving the price than any classic chart pattern you'd read about in a book.
At the end of the day, this whole smart money concept completely reframes how you see the market. Price movement is no longer just random noise. Instead, it becomes a story, a very logical, maybe even a bit ruthless story about how liquidity gets moved from the uninformed traders to the informed.
And that leaves us with one last thing to think about. Whether you believe this concept is 100% real or just a different way to look at things, it makes you ask a really important question every single time you look at a chart. If the market is telling a story, what story are you reading?